Stock of the day. Well, love of a different strain. Commbank. Has it fallen out of love with investment markets? Boom, boom. There's the link. Tenuous as it may be. After its results out today, pointed that financial strain is expected to continue in the year ahead as customers feel the lagged effect of higher interest rates. Commbank reported a 3% fall in first half cash profit as lower loan impairment expenses were more than offset by a flat operating income and higher costs. Cash profit for the period coming in at just a tad over $5 billion, lower on a year earlier, but above the $4.95 billion the market was expecting. Quite a reasonable drop in its share of the housing market as well. Of course, it's dominant there. Mark Gardner, what did you think of the Commbank result, and have you fallen out of love with it?
I've been out of love with CBA for a while. We used to just prefer just being in the hybrids. We can sleep, we get roughly about the same annualised return. Look, they provided very little guidance on the outlook, which is unlike them.
Was that a surprise?
Yeah, that's a surprise for me. And because they normally always do, and that usually uncertainty is not the market, not your friend in the market. So, but NIM dropped, loans in arrears were up slightly. Their market share dropped by 0.5%. But the big thing for us, and hasn't really been talked about, but the lending capacity of their clients has dropped 40%, which is almost in the last 2 years. So that basically means the amount that their customers can borrow from them has dropped by 40%, which means that that's a huge capacity drop for a company that's losing market share. I think the NIM will correct itself. The inverted yield curve obviously affects NIM. I think that will improve in the latter half of the year. Because obviously the yield curve's gone a little bit higher, from those lows. It would definitely be higher than the average period over the last 6 to 12 months. So that will improve. But I mean, if this doesn't have the name CBA on the top, you're probably really upset. I mean, they're losing market share, cash profits down, slightly riskier book, and then
5-year high.
Yeah, no, exactly. If this wasn't Commonwealth Bank, it's probably 15 to 20% lower, to be honest. But because it gets the benefit of that index buying, it's been a consistent performer over a long period of years.
So if you're a Commbank shareholder, what do you do?
You definitely sell, but it's one of those ones that people are super reluctant to sell because they've had them forever. They're worried about capital gains. So you've got really sticky shareholders. This and BHP are two stocks that you rarely. They always trade at a premium to analyst expectations because the shareholders they don't care. They probably had them. Yeah, I mean, many clients we've got have held them pre-GFC. If you manage to hold them to the GFC, you're not even a bead of sweat coming off your brow at this point. So, but I think this realistically should be analyst consensus is $90, but we usually just add about 8 to 10% premium because it's it's a much loved stock. So I think it'll probably pull back to around about the high high 90s mark at some stage over the next few weeks.
Okay, Jess.
So I'm a same view, similar. I wouldn't say sell all. I'd say take some profits.
Right.
So I'd say most people are quite bearish. If you have a look at the breadth of investment houses and analysts that cover the stock, not one has got it as a buy. So I'd be expecting some downgrades on the back of today's outlook, walking away from guidance, and also disappointing impairments ahead. But that's obviously to be expected. CBA is a proxy of the consumer, and we are feeling pain. The average consumer, delinquencies are up, bad debts are up, and that's expected to continue till 2025. And that's when the numbers might potentially start to turn around. But for now, the margins, all metrics are actually are down, as we're saying, as it reads black and white on the screen, everything's down. Slightly better than expected in terms of some outcomes, the NIM, but again, we were talking about banks being downgraded the most across all of the 11 GIC sectors. So no surprise, the benchmark was a little bit low, but they still disappointed. A
drop in market share in the home loan market, because some people unkindly say Commonwealth Bank is sort of a if you like, an old credit union on steroids or a building society because it's all home loans. So a drop in market share, but during the year they decided not to keep doing business through brokers, mortgage brokers, and then they reversed it after a couple of months. So I wonder if that had an issue in terms of the drop in market share over that period.
Yeah, I think it did. And that's probably why we're seeing some of the smaller regional lenders also increase their market share as well.
Right.
And this has not been a phenomenon, it's been something that's been happening over the last couple of years.
Yep.
Obviously increasing competition. And another thing is you're seeing a lot of the other competitors actually gain market share in credit cards.
Right.
And delinquencies are rising in credit cards as well, particularly in the younger end of town, 30 to 39.
Right.
And that's a bit of a headwind as well.
Bit of a red flag.
Yeah,
All right.
but I mean, if you loved it in the COVID-19 lows and bought it at $55, you'd be taking some cream off the profit today. Yeah.
Exactly right. I'll put those issues, the drop in market share of the home loan. Fascinating stat from Mark Gardner, sort of the loan capacity of Commonwealth Bank clients down 40% over the last 2 years.
Yeah.
2 years. I'll put all those issues to Commonwealth Bank boss, CBA boss Matt Coleman later this afternoon on those results. I'll be chatting with him around 3 p.m. Eastern right here on Ausbiz. A lot to get through. All right, let's